Time for another stock review. This time we are talking Polaris Infrastructure. There is limited information on this stock, however, so it's going to be a harder one to do. I can't show you on Robinhood, I'm afraid, but I am going to show you, though, the intrinsic value. I'm going to show you all the balance sheet, the numbers, the inside trading, who's buying, who's selling. I'm also going to be able to give you a guide here why you should invest or consider investing in the company, news on the company. I'm also going to share you some information just out, plus how it compares to the S&P 500. So I apologize for not being an extensive review as normal, but there just isn't information readily available in my normal sources for this one. Tap the like button and subscribe and ring the bell as we get straight into this. This was requested by a member called Malik Acid. If you are a member of our channel and you do a super chat from $1, you can then get a review. The more you bid, the higher it goes up the list, and so on and so forth. But this is the best I can do on this stock, I'm afraid. There's not a lot of information. This also accompanies the Meet the CEO series. So if the CEO would like to be on our show, then we ask you to invite them via investor relations, and I'd love to learn more about the company. It's a Canadian company, and let's go straight into it. Let's first of all look at the intrinsic value. The intrinsic value is saying it is undervalued by 32%, 1883. Or I should actually mention, before I do this, I should tell you what the stock is, right? Polaris Infrastructure engages in the acquisition, exploration, development, and operation of renewable energy projects in Latin America. All right, that's what it's about. So the value of this company is 1883 on the base case, which is undervalued by 32%. Best case scenario, it's undervalued by 53%. Worst case scenario, undervalued by 13%. So it seems to be a good buy at this stage. I do like renewable energies. Plus, there's no warnings here on the intrinsic valuation, so it seems pretty accurate and reliable. Let's scroll down and look at their business. They have a revenue of 79 million, up 0.7, expecting an increase, as you can see, peaking around about 86. No S-curve really planned here, but a slight growth nevertheless. Operating income is at 31.8 million, up 13%, expecting it to rise a bit more over the next couple of quarters and then fade away. Okay, always a concern. 11.4 million, down 3%, expecting that to rise. Financing cash flow up 0.1%, and we have no projections past there. Investing cash flow is down 15%, which is a positive, of course. Operating cash flow is down 3%. What about the balance sheet? 515 million in assets, of which 41 million is in cash. I don't like businesses with too much cash sitting around. Don't mind some cash. Apple, it's fine. Amazon, it's fine, because they're a cash cow. They've built out their businesses and they can have money sitting around earning interest in periods of high interest and invest it. But for a smaller company like this, you want the money to work for you. So the fact it's got only 41 million is great. They've got cash, but not excessive. I like that. What about the liabilities? 244 million, not too bad. 156 million, however, is long-term debt, which makes up 63% of the pie is long-term debt. I don't like that. That's quite a lot of debt. Plus, the liabilities is okay, though. It's about 50% or thereabouts of the asset of what's in the asset. So the balance sheet is okay. A little bit too much debt in my mind, though. Gross margin 49%. 49%. Again, in a minute, we'll give you the link to the competition. You can go and check out the competition and see how it compares, see if you like it. Operating income 40%, net margin 14%, FCF margin 42%, ROCE 6%. ROIC 11%. If you want to access these, I'll give you the link for it in a minute, and you can go on my software, use this and dive deep into these numbers and get more information. I'll give you that. All my members can access this for free. I will give you that in a moment. ROA 2% and ROE 4%. Okay. Scroll down. Profitability then, 58%. Pretty good. Pretty good. 58% is profitability, and solvency is 34% because they have a bit of cash, 50% thereabouts liabilities, and there's a bit of debt there, but it's manageable. The company, you can be assured, isn't going to go bust the moment you invest in it, like we do see from time to time. There's a relatively safe access here. Right. Lowest scenario, 51% upside. Wall Street like it. There's a good upside here, 79%, 164%. So we've got a good balance sheet. We've got a bit of cash. We've got good solvency. We've got good expectations. We've got small amount of growth and perhaps undervalued. So far, on paper, without looking into this further, it would suggest it's a buy if you like this sector. Right, competition. You can see some competition here. We're looking at Borealex, Trans, Ultra Renewables, and EGECSAC Renewables. If you want to access these, I suggest you do use my software, because essentially, if you like the sector, you want to see if this company perhaps has the best margins, has the best balance sheet, and then you might find another company which is better to invest in, has a better rate of return, better expectations. That's what these links are for. I'll give you the link for that in a moment. Right, short interest, well, 3%. So no real short interest here. No one's trying to bring the stock down, destroying it. So that looks pretty good to me. So no problem at all with that. No short major interest there. Very little information on sentiment. No one's covering this stock. It's a very unknown stock, so this will probably do well on our channel. It could rank, which is nice. It's from Canada. I'm going to read some more information about it. Polaris Infrastructure engages in the acquisition, exploration, development, and operation of renewables energy projects in Latin America. The company is headquartered in Toronto, Ontario, and currently employs 151 full-time employees. Very small company then. The company went to IPO on the 30th of August 2004. The company, through its subsidiaries, Polaris Energy Nicaragua, and San Jacinto Power International Corporation, owns and operates a 72 megawatt capacity geothermal facility in San Jacinto, located northwest of Nicaragua, near the city of Leon. Though its subsidiary Empresa de Generacion Electrica, the company owns and operates a run-over-river hydroelectric project with a rated capacity of approximately 5 megawatts, located in the Canchayllo district of Peru. The firm, through its subsidiary Generacion Andina, also owns and operates two run-off river hydroelectric projects with capacity approximately 8 megawatts net and 20 megawatts net. Fair, very, very nice indeed. Okay, there's more information on the company. Market cap, 268 million, so it's quite a small company. Dividend yield, 10%. Now, I could not find information on their dividend yield. I couldn't find their chart. I couldn't find much information on the company, so you need to do further research. It does look interesting, though. I like this sector. Looks promising. I don't know about that dividend. I can't check the history of it, so I can't comment on that. Let's see how it compares to the S&P. 2015. 2015. This is quite interesting, actually. 2015, if you put $10,000 in the S&P, you would have 3x'd. 31 grand. Very nice indeed since 2015. $10,000 though in this company would have produced 19 grand, 19,950. You'd have doubled your money. And that's unusual for stocks like this. If we look at it, Polaris is in green. You can see how it popped up there. It's very volatile. Below, pops it up. So it looks like a trading stock. Look at that. Sell here, buy here, sell here, buy again here. Look, it keeps underperforming and outperforming the S&P. That's like people who like to trade the S&P might like this because it kind of tracks it, but underperform, overperform, underperform, overperform. So if you're selling here and buying here, sorry, I beg your pardon, buying here, selling here, buying here, selling here, you're outperforming the S&P. Very rarely I see this on renewables. So that's a very interesting chart. So this is a potential buy, but you'd need more information. We've got some news here just out, let's say June 20th, just a couple of weeks ago. Polaris Renewable Energy announces results of director elections at annual and special meeting. I couldn't find any juicy news around this stock, but I did put this out because it was all that was available. They just basically appointed new directors. Nothing really exciting, but it's all like a grab, I'm afraid. Here is the company. This is Renewables, Polaris Renewable. We are a Canadian publicly traded company engaged in the acquisition, development, and operation of renewable energy projects in Latin America. Very little news, not a lot to talk about, really. Let's read what they say, why you should invest in this company. Quality portfolio, high quality, diversified technologies and jurisdictions, financial strength, solid balance sheet, they do, an increasing cash flow, they do. Management strength, experienced board and senior management, can't comment on that. I'd love to have the CEO on the show. Maybe they come on the show. If you email them, I'll have them on the show. Commitment to higher standards. Stakeholder value, sustainable dividend, and community investment. So we do have a dividend with this stock as well. I've not been able to find much information on that, but it does claim to have. You could, of course, check their prospectus and read more about it. Shares outstanding 21 million. Annual dividend 60. We are finding more information now. 60 cents per share. Now that's all very well and good, but I don't know how long they've been paying it out. Are they continually increasing? But a 10% dividend. I mean, let me try to find Polaris markets. Let's have a look. Let me just go back there a moment. Let me have a quick look. Overview. Let's see. There's very little information on this. I'm going to not focus on this 2 month year. So here we go. All time we're down 95%. 5 years we're down 15%. 1 year we're down 13%. Year to date we're down 2.67. Right, now this is interesting. 6 months we're down 2%. 1 month down 2%. We've been up on the last 5 days. Okay, now let's if we look at the all time. Okay, you can see. Let me just clear that a minute. You can see how it's gone down here. The last 5 days looks okay. Last month, you can see it's down. Now, looking at that, you're paying for the dividend. If this dividend is being paid out all the time, you're basically making a dividend. But how sustainable is it if the stock price keeps going down? You'd need to read the prospectus, but it's all very well and good having a 10% dividend, but how often is it paid out? And the stock is depreciating by this much. Over the year, you've lost 2.67. So you'd need to look further. I've got very limited information to review it. So let me wrap up this review, and I apologize not being able to show it on here. But I like renewables, but I don't invest in what I don't understand and what if there's little information. A dividend paying stock is okay. It's not really great for a younger investor who wants to grow their portfolio. It's more designed for someone who's made their money who now wants a continual passive income. However, if the stock is going down by the same rate as the dividend, it's not really paying you anything. Banks get away with that. A Bank of America, like for example, pays you a dividend, but the stock doesn't go anywhere. And I don't really think it makes much sense owning the stock, but that's just me. There's no growth there. So it's one for further investigation. If you like passive income, I get it, but you'd need to know how often it was paying it out and the history. It could suddenly stop, remember, and with the stock going down 95% over time, that doesn't look too good. But recently, it's done better. Anyway, there you go. What do you think of that? Click above my head, down below in the description. Over here and over here, I'll put my full alpha spread playlist to see all the stocks I reviewed. Down there, I'll put the playlist for this stock or another playlist I think you might find interesting. I don't know enough information about it. There's not enough information readily available. That's a reason not to buy it, but further investigation. I'm going to give it a 1 for further investigation. Till next time, as always, take care of yourselves and each other.